ready to supercharge your wealth. We've all heard about the real estate moguls and stock market wizards, but which path is right for you? Let's dive in. 65% of American homes are owner-occupied, as per the U.S. Census Bureau. And 55% of American workers are in on the game through employer retirement plans. If you're nodding along, chances are you've already got a foot in the stock market. But what's the smartest move for you? Whether you're a seasoned investor or just starting, you'll want the lowdown on both strategies. The good news: you don't have to pick just one. You can have your cake and eat it too. Imagine investing in real estate without the hassles of buying, managing, and selling properties. Curious? Stick with us and we'll break it all down for you. Investing in real estate. Discover the world of real estate investing, where opportunities abound and fortunes are made. Real estate investments fall into two exciting categories: residential properties, your haven, rental income generators, or potential profit-flipping ventures, and commercial properties, bustling apartment complexes, towering office buildings, and thriving strip malls. The pros. 1. Simplicity and control. Real estate investing is refreshingly straightforward. You buy a property, oversee its upkeep, and aim to sell it at a higher price. Unlike the complexity of stocks, owning tangible assets provides a sense of control over your investment. 2. Safer leverage. Real estate lets you invest with less risk. With a down payment as low as 20%, you can finance the rest through a mortgage. Compare this to the perilous world of margin trading in stocks, reserved for seasoned investors. 3. Inflation hedge. Real estate often acts as a bulwark against inflation. Home values and rents tend to rise alongside inflation, preserving your investment's worth. 4. Tax advantages. Property ownership can be a tax haven. Mortgage interest deductions, capital gains exclusions, and 1031 exchanges for commercial properties offer substantial tax breaks. Additionally, depreciation allowances can reduce your taxable income. The cons. 1. Hands-on effort. Unlike stocks, real estate investments demand hands-on effort. Managing and maintaining properties, especially rentals, can be labor-intensive. 2. High costs and illiquidity. Real estate investments require substantial upfront capital. Selling properties is more challenging and less immediate than trading stocks. 3. Costly transactions. Closing costs can take a significant chunk off your sale price, in stark contrast to fee-free stock trades. 4. Limited diversification. Real estate diversification isn't for the faint of heart. Location plays a pivotal role, with sales surging in one area and slumping in another. Diversifying across various property types demands deeper pockets. 5. Uncertain returns. While property prices typically appreciate, there's always a risk of selling at a loss, as the 2008 financial crisis painfully reminded us. Stocks share this risk. Dive into real estate with eyes wide open. It offers control, safety, and tax advantages, but demands sweat equity and upfront capital. Weigh these pros and cons to navigate this captivating investment realm wisely. Investing in stocks. Unlock the world of stock investing, a thrilling journey filled with opportunities and pitfalls. Here's a quick dive into the key points. The pros. 1. Liquid assets. Stocks are your passport to liquidity. Unlike real estate, where your cash might be locked up for years, you can buy or sell publicly traded shares in a flash. Plus, tracking your investment's value is a breeze. 2. Diversification made easy. Building a diversified portfolio in real estate can be time-consuming and costly. Stocks offer a faster and more affordable way to spread your investments across various companies and industries. The shortcut. Consider mutual funds, index funds, or ETFs for instant diversification. 3. Minimal transaction fees. Say goodbye to hefty transaction fees. Thanks to fierce competition among discount brokers, most stock trades cost you nothing. Plus, you'll find plenty of no-transaction fee options for mutual funds, index funds, and ETFs. 4. Tax advantage growth. Supercharge your investment in tax-advantaged retirement accounts like 401 Seconds and IRAs. Watch your wealth grow tax-deferred or even tax-free. The cons. 1. Roller coaster ride. Brace yourself for stock price roller coasters. Stock prices can swing wildly, much faster than real estate values. This volatility can be gut-wrenching, so consider a long-term strategy to weather the ups and downs. 2. Capital gains tax. Selling stocks might trigger a capital gains tax. However, holding on to stocks for over a year could qualify you for lower tax rates. Keep an eye on stock dividends too, as they can be taxable. 3. Emotional decisions. While trading stocks is easier than managing real estate, it's not always the right move. Emotional reactions to market fluctuations can lead to hasty decisions. A buy and hold approach often yields better returns. Step boldly into the world of stocks, armed with these insights. Liquidity, diversification, and tax advantages beckon, but prepare for volatility and emotional challenges along the way. It's a thrilling journey for the savvy investor. As we wrap up this showdown between real estate and trading, there's one more option to explore. Check out the video on your screen to learn about REITs, Real Estate Investment Trusts, a unique way to invest in real estate without the property ownership hassle. Click now and dive into the world of REITs. Thanks for tuning in.